Hi there, and welcome to this edition of the Retire Happy Money Minute. Today I want to give you a little perspective on the market itself. You might have noticed how much volatility we've had. January was a rough month, and we're starting off rough again here in February. So we're halfway through the month, and we're worried about Russia invading Ukraine. We're worried about inflation, political conflicts, rising interest rates, the Federal Reserve pulling back from supporting riskier assets, and a variety of other factors that are really contributing to this pessimism and to the increased volatility, especially downside volatility, in stocks. So if you're going to invest in the stock market, I know that there's a lot of charts and you always hear, oh, the market always comes back, the market always goes up. Well, yes, sort of. And this is why I want to give you this perspective. Let's talk about the S&P 500. Over 80% of the value of the all traded stocks are part of the S&P 500. Those are generally considered the largest 500 stocks that are publicly traded. The S&P 500 index made its debut on March 1, 1957. So we're coming up in a couple of weeks on that anniversary. And of the 500 stocks that were in that original index, the one that you see all the charts that are growing, 86 of those original companies are still in the index. So that is, goes to show you that yeah, the market has gone up, but companies come and companies go. And this is going back to 2003. I'm quoting you out of a research paper by Jeremy Siegel and a few other contributors that was published in 2003. And in 2003, of those original 500 companies, 125 were still in business. So that's a pretty big drop down in the number of survivors, if you will. 96, I need to correct, 96 were still in the index, 26 were still publicly traded, and 5 were in bankruptcy proceedings as of the writing of the paper in 2003. So even if the market continues to rise, in general, companies will come and go. So when you find a company you love and you bought it real cheap and it's gone way up and you start saying, well, I don't want to pay taxes, sometimes that's going to save you a lot of money because you just don't know when things are going to change. I hope this helps you when you evaluate what you're investing in, whether it's individual stocks or mutual funds or even exchange traded funds or index funds. Because yes, there is a tendency for the economy to continue to grow over time and for stocks to, at least historically, go up. But what do they always tell you? Past performance is no guarantee of future results. So take this information, look at your investments, and decide what's the best place for me right now. Here's to you having a very happy retirement.